Welcome back to the second episode of the Stocks I Bought series. This episode, we're going to cover the month of October 2024. Let's dive right in. Starting off with the indices, we see the S&P 500 actually had a slight loss over the month of October. And NASDAQ was up 1%. Dow Jones has almost a loss of 1%, and the TSX 60 was up about 0.4%. Comparing that to my RSP, we have VDY at 0.23%, XAW up 1.57%, SCHD up 0.25%, and VTI up 0.16%. Taking a look at my moves, I did my typical bought and bid month in my TFSA and end of month for my RRSP. However, I also have been thinking about streamlining my portfolio over the past few months, and that involves kind of what I'd like to get rid of, what I'd like to hang on to, what I'd like to expand to become kind of core positions. And my RSP, I think, is pretty good. I have that streamlined down to just 4 stocks, but my TFSA has many, many more. One thing to note about my TFSA is that I have a significant portion of it in income-focused ETFs. And while I want to keep some of it in income-focused ETFs, I want to streamline them, focus on top performers, and also get some growth in there. So let's take a look at what I bought and sold this month. So the major move of the month is I sold all of my cash position. So that is the Global X's high interest saving account ETF. And the reason behind this is as the interest rates get lowered, the return will be less. And it has now been over a year since a potential alternative has been released, and that alternative is SPLT, which is an ETF from Brompton. And what does it do? It holds 20 preferred split share funds. And as interest rates drop, it will have far better returns. It already has better returns, but they will just compound. Let's take a look at that. So if I look here on Brompton at SPLT and look at the performance, you can see an investment of 10K back at the end of November till now would have risen 13%. Whereas if I look at the past 1 year in cash, the return was only 4.75%. Arguably, the cash one is slightly safer, but preferred shares are quite safe. There's a reason why Warren Buffett always requests for preferred shares or stock in a company. Jumping back into the portfolio, I sold all of my RS, or the Real Estate Corp split share fund. A few reasons here. It was a big loser in my portfolio for a very long time, and it was up close to my average book cost, but with dividends, it was a slight gain. We do also own our house and are paying down a mortgage, so we are invested in real estate through that as well. So I decided to sell out that and started the new position in QQCL, so some income related ETFs based on the NASDAQ 100, which is kind of a recurring theme. I'm trying to get more exposure to tech and more exposure to the NASDAQ 100. Continuing on with the streamlining approach, I sold out of all of my LBS, which is Brompton's Life and Bank Split Corp. So for the past 2 years or so, I've been down significantly on LBS, even considering the crazy dividend that it gives of 15% or so. 13, yeah, it's 13% right now because the prices went up, but it was seeing 15, 16. I want to say it may have even hit 17% at the lows. But we can see here over the past year, it has risen 83%, up high enough for me to be at my break even. And I just know the feeling of it being down so much for such a long time, paired with it overlaps with a couple of holdings that I currently have. Decided to exit that position at a slight gain, basically break even, and build out my core positions. One of them being the VDY, which I've illustrated before. It hasn't risen as much. You can see here, a year ago, an investment of 10K would have only went to 13K, whereas LBS went from 10K to 18K. But again, this just was because it's beaten down so much and it employs 25% leverage. I did take a small portion of that and just beefed up my PSA, which we chatted about before, but that's just purpose investments, high interest savings account. In the past 1 year, it has returned compound return of 4.85%. So slightly more than Global X's, which was 4.75%. But at the same time, I don't want to go all in on SPLT just in case something happens, right? It's good to have a little bit of diversification. Now, with my regular buys of the month, I bought more HXQ, so same story as last month. I bought more QQCL, which I bought earlier in the month with the selling of RS. And finally, I closed off my position. Sorry, I should say I finished my position for my speculative MJ stock in the Planet. All right, so taking a look at my entire TFSA now, you can see SPLT makes up a significant portion. It is pretty close, but slightly higher than my second biggest position, which is VDY. I did start a bank position on a line of credit with a credit offer. This isn't something I'd recommend, but it has so far proven to be a very good decision for me. Now, the biggest loser of my account is AQN, right here at the top. I'm down about 50% on that one, still bag holding. I don't really see any reason to sell it right now, unless I feel really good about something in particular that would potentially 2x over the short term. I feel like it's just one I should hold. And as interest rates cut and as they kind of get their business back in order, I think this one will recover, but we will see. The other one that I'm down on is TELUS. TELUS has been struggling, but same story here. As interest rates go down, they should recover. I just want to call out again here. So SPLT is our emergency fund. Sitting at 19 positions currently, and I would like to reduce that to about 15. I don't count the Planet. That's why it's not in here, because it's just a very, very small position. Now taking a look at my RRSP. Nice and simple, as it usually is. I purchased one stock, VDY. And with Canada cutting interest rates before US, the US dollar to Canadian dollar rate was some of the worst it's ever been. So I'm glad I was buying a Canadian listed security. You can see here at time of writing, it would have been about 1.41 Canadian dollars to 1 US dollar, assuming you're not using Norberts Gambit. Taking a look down percentage wise, you can see VTI makes up almost 50% of my RRSP, with VDY, SCHD, and XAW being pretty much even for the other half. This does have US dollars converted to Canadian dollars, so since the Canadian dollar is very weak right now, it helps boost the percentage of VTI and SCHD. Now, finishing off with the Greed and Fear Index, we're at 61. So a little bit less. I believe you were at 68 last month, but still very healthily into the greed section of the monitor. And as we continue on into the end of the year and the good old Santa Claus rally, I think this is going to continue. That's all for this one, folks. Hope you enjoy, and please like and subscribe for the next video.